Hey guys, good afternoon, happy Friday. It's 2:15 on August 27th, 2021. Hope you're doing well. Had a good week. Brief video here, guys. Just in terms of trend line discussion, just really quick. So as you know from the videos I've been doing here, I have been talking about using the DEMA and TEMA moving averages on, between the 15-minute and the 1 hour, just to identify potential trades. I know I had referenced in actually probably the last couple of videos and many other ones that you should try to make sure that you're trading in the direction of the daily chart. Well, I've kind of tempered that back a little bit just with a lot of back testing. And some people might disagree with me, but that's okay. Now look, if you're looking for trades on the short time frames, whether it's the 5-minute, 15, 30-minute, hourly chart, anywhere in here, and those trade setups are in the direction of the daily trend, that's awesome. That's even a better confirmation. But you have to remember something. If you're looking for a trade on a 15-minute, even up to an hourly chart, it's okay to trade against the larger trend that you might see on the daily or the weekly chart, because it's so far away that you're not looking to hold these counter trend trades for a long period of time, but it doesn't mean they're not valid. And just on this chart alone, and actually let me go to a different one, because there is a larger discussion here. So here's an example. This is the Kiwi yen on the dollar chart. The hourly chart. This is a perfectly valid trade to the upside here. You had this crossover. This is a perfectly valid upside trade, even though on the longer term time frame, we had a downtrend going. Okay, we had this downtrend going, but this is a valid trade to the upside. Okay, so if you're taking entries anywhere from the hourly chart and lower, using these crossover strategies or whatever else you want to use, perfectly fine to do. If it also coincides with the daily trend, even better. The only difference you have to understand is that if you are taking it against the larger trend, you just have to know that it is against the larger trend, and you need to be aware of the levels on the daily chart or the weekly chart, depending where the trend is. And just be aware of where major turning points might happen on that longer time frame to resume the larger trend. Okay, and I'm going to use this pair as an example. Okay, so again, this is a valid long position right here, and you can see it's very valid. I mean, if you had gotten in here and you were still in this right now, you'd be up 190 pips. There's no reason why you couldn't take this trade, even though it's against the trend on the daily or the weekly chart. Okay, which is down. Now you could argue that the weekly chart is up, but I would say not, because I really can't put a trend line on this. So I would say I'm drawing the trend line on the daily chart. So that's this white line right here, guys. And what I've decided to do is I've made videos in the last few months that talk about trend lines. And I was drawing them on the short time frames, on the 4 hour, the 1 hour, down to the 15-minute, and I was drawing them all the way down. And I just didn't find that to be reliable enough. I find these dynamic areas with these moving averages are much better. So I've gone away from doing those trend lines on short time frames. However, I am still a believer in kind of that self-fulfilling prophecy about where these price movements tend to go, because there's a lot of other traders that are watching these trend lines too. Okay, and that's why they work. It's a self-fulfilling prophecy. I'm not the only one seeing this trend line. Okay, now fundamentally it's going to be fundamentals that are going to decide ultimately whether this bounces and turns back down or whether it blasts right through here. But when it gets to these areas, there's definitely going to be some kind of action. So you can see on this pair, on the Kiwi yen on the daily, we're very close to hitting this trend line. What's it going to do when it gets here? Well, that remains to be seen. And I'm not, there's no point really getting into that at the moment. So what I did is I've gone through all the pairs that I watch, and I've gone to the daily chart or the weekly, depending where I could see the trend, and I've just drawn one single trend line. Okay, and there's a couple of pairs I didn't put one on because I couldn't identify a trend either way, and those I just won't even look at. But for the most part, I think there was only 2 or maybe 3 I didn't draw one. But the other 20 or so I put one on here. And again, I go to the daily, and if I don't see one on the daily, I'll check the weekly. Excuse me. But for the most part, I'd like to see the daily one. Okay, so daily or weekly, draw one single trend line. And remember, if it's a downtrend, you always draw it across the top, not across the bottom. Always across the top. If it's an uptrend, you draw it underneath the lows. If it's a downtrend, you draw it across the highs. Okay? Always remember that, because so you're getting resistance areas in a downtrend, and you're getting support areas in an uptrend. All right? Really, you should be looking at, at least 2 areas. 3 is better. So we've got 1, 2, 3. We're approaching a 4th area. Now, the other thing I want to say about this is that each time price comes up and touches a trend line, okay, the longer that goes on, the more chance that eventually this is going to break through. Okay, so is it going to be on this one? I don't know. Will it reject again? It might. I'm not sure. But it won't go on forever. Eventually, one of these touches is going to break through. It's going to keep going. All right. So I'm not married to it either way, whether it's going to break through or whether it's going to turn and go back down. But just understand that the longer these trends go on, and with each, touch of this trend line, the percentage chance that it breaks through goes higher each time. Again, I'm not saying that's what's going to happen here, but just be aware of that. Once you get to this potential 4th touch right here, and then any subsequent touches, if it keeps going down, the chance of this going up higher continues to increase. Okay? So very simple, like I said, daily or weekly, draw out your trend line across the highs in a downtrend, across the lows in an uptrend, and connect at least 3 highs. It doesn't really matter whether it's the candles, the high or low of the candle, or the top or bottom of the wick. It doesn't really matter, just as long as the trend line is not cutting through the price, the main body of the candles on this time frame. You might go to the shorter time frame and see it cutting through. That's okay. Just make sure that on the higher time frame, which is how I have this drawn here, it's drawn in about the best you can get it. It's not an exact science. It's just to give you an area to be aware of. So now on this particular pair, again, if I go down to the hourly, you can see how close we are. All right, we're only 12, 14, 15 pips away from this trend line. So am I going to be looking to take a long position in here right now? Probably not, because I'm so close to the trend line. This thing probably will come down a little bit, and it'll make another run up, and then I'm going to see what happens. If we get a blasting effect through this trend line, then yeah, potentially it could keep going. Now we had that happen over here, and then you can see 1 hourly candle, and then it rolled back over. So you're going to want some confirmation that it's actually going to go. But we're so close to this trend line, am I going to take a long position on my short time frame, when it's only less than 20 pips away from hitting this major trend line off the daily chart? Probably not. I'll just keep this one on my watch list, and I'm going to see what happens when it gets over here. If it gets over here and it tries to poke through and then it's bearish and it rolls over and starts going back down, this will be an awesome trade to the downside. You pretty much will reverse this whole move up. Okay? But I don't know if that's what it's going to do, so let's wait and see. Let me just look for something else to kind of show you just the opposite. Okay, so here, let's take this pound Swiss. Okay, so here's your overhead trend line here. Downtrending market on the daily. Down, down, down. 1, 2, 3 touches down. And now, is it going back up? Okay, well, look how far away from the trend line it is on this pair, on this time. This is the daily chart. We are about 170, 180, 160 pips away from this trend line. This is so far away right now. I don't care. This is not going to weigh into what direction I trade this pair, okay? Because it's nowhere near the trend line. And in fact, it's really not anywhere near the support. It's kind of like right in the middle. So this is one where I'd say, you know what, I'm going to go down to my short time frames and I'm going to look for my trades in here. Okay, and obviously just looking at this really quick, this is in the downtrend right now. Okay, so if after you draw your trend line, you look and you're like, okay, well, the price is really nowhere near that major trend line, then again, leave the trend line on there. It's always good to have it just so you know where it is. So when price does start to approach it and you're on your short time frame, you start to see it come into your view. It just reminds you that, hey, you're getting close to a major area of support or resistance. You might want to think about being cautious if you want to take a trade around those areas. And if you're already in a trade as it approaches, that might be a good area to take profit. So let's say, you know, on this, back to that Kiwi yen, you know, let's say you were long on this right now. Let's say you've been long from wherever, anywhere in here. It's getting up here. This is probably an area where I'd be looking to exit. You know, anywhere, actually anywhere from here to here now. This probably will go back up a little bit, make another push up, because this looks like potentially a wave 4. This is a little 5-wave trend right here. So this probably will go up. Probably, I'm thinking it will touch the trend line. It might actually break through for a couple of candles. But this is an area where I'd be looking to exit. Anywhere from where it is now to maybe a little bit above here. Okay, this is your area that, if you were in a long, where you're probably going to look to exit this position. Okay, probably somewhere in this area. Okay, but on this pound versus the Swiss, again, this is too far away for this trend line to be consequential right now. So I'm probably going to, if I'm looking for trades on this pair, it's going to be on the short time frames. It'll be on the 5-minute, 15-minute, 30-minute hourly chart, and just basically using, again, the moving averages to help me point out trends. And on the 1-hour chart, so actually, as far as I'm concerned on this pair, there's no trade right here, because we have an uptrend still technically in place on the hourly chart. We're still above the 200. It does look like it's trying to trend down, but and on the 15-minute chart we're down. So technically this is not a pair I'd really be even looking to trade right now, just because on the short time frames I'm looking to use the 1 hour as my kind of guidepost, and then look for entries down around the 5-minute to the 15-minute. So, but putting that aside, you know, if we get to the point where this 50 period breaks, crosses back down, I would be looking for shorts here. But either way, you can see all the real estate between where price is now and the daily trend line. All of this right here. So price wants to go back down, fine. If it wants to go up, fine. And if it does go up, I'm good until it gets back up and, you know, to this trend line wherever it ends up, whether it's here or down further down the line here. Okay. So I just wanted to kind of throw that in there as yet another way you can kind of mark off your charts. I would not go and start throwing trend lines all over your charts. It's just not, you're going to find it's just not really very valuable, and I don't want that on there either. That's an old exponential. But I think there is value to going to a daily or the weekly if you can see a valid trend where you can connect at least 2, preferably 3 points or more. Go ahead and do that, and use that only if price, and only really worry about that when price gets really close to it. If it's nowhere near it, if it's kind of halfway between the boundary of where price started and where that trend line is, I wouldn't worry about it, for instance, in this case. Okay? Whereas again, with something like the New Zealand dollar yen, we are very close to this trend line, so this one I would be very cognizant of where price goes as it approaches this daily trend line. Okay? So I hope that helps. I'm going to try to maybe make another video over the weekend just to kind of review this strategy again in terms of the DEMA and TEMA moving average strategy, which again I only use on the short time frames from the 1 hour and lower. And again, what I try to do is use the 1 hour as my guidepost. Where's the trend on the 1 hour? In this case, for this pair, it's up. as of, you know, this area right here, and I'd only be looking for long positions based off the 5 minute, 15 minute, maybe the 30, but probably the 5 or the 15. But again, as this gets closer to this trend line, that's not an area that I'll be looking to take any more positions at all, long or short, until I figure out what price is going to do when it finally tags this area. Okay? So again, guys, you can just go through your charts and, you know, mark off these areas. You know, the Aussie yen is the same way. You can see on the Aussie yen, even more than the Kiwi, we are sitting right at this daily trend line. Again, I want to get rid of this blue one. We're sitting right at here. Okay, now what's this going to do? Is it going to just keep going, you know, take a new uptrend? I have no idea, and right now I don't care. But we're bumping right up against it, so I am not going to be looking to take any long positions or short positions for that matter on this pair right now until I know what this is going to do. If we get a blasting effect where price just rockets through here and then maybe pulls back and retests, then this is going higher. There'll be definitely a place to look for longs. But we're getting up against here. This is a major area of support, resistance on this daily chart. Do we see price just poke through here and then quickly reverse and turn back down? In which case I'll be looking to set up a short, and it'll be a nice short. So again, this is one where you need to be very aware of what's going on and how close you're getting to this daily trend line, okay? Because there is going to be a reaction of some kind at this trend line. There is probably going to be some resistance. There is going to be probably some kind of price rejection. Now, whether it forces the downtrend to continue or whether it's just a little pullback and the buyers step in and blast this through, that remains to be seen. Again, I have no bias either way. But I am aware of this trend line and not to look to be taking trades right up against it right now, because there's too many unknowns of where the price might go. Okay, so that's about it, guys. Just want to leave it there. Again, draw out your trend lines, daily or weekly chart. If it's not there and you can't easily, don't try to force it. If you can't connect those trend line, across 2 or 3 highs or lows, just skip it. Just don't even bother for that pair. But most pairs you should be able to do that, but only do it on the higher time frames, the daily or weekly. And then just be aware of prices relative to that trend line. But it doesn't mean you only have to trade in that direction. If it's nowhere near that trend line, like I showed you on the pound Swiss, then drop to your hourly chart lower and just continue to use this moving average strategy of crossovers and support and resistance here, just to buy or sell in between, whether it's on the way up or the way down towards one of these trend lines. Okay, and only when it gets close and really gets very close to that trend line should you be aware of it. And again, if you are in one of these trades, again, if you are in this trade going up, this is a nice area to consider to take profit, is as it comes up against one of these trend lines. This is an area where I'd probably be looking to exit if I was long, which I'm not, but if I was, this is where I'd be looking to exit this position. Okay, it's a nice area. Just say, you know what, I'm going to run into selling right here. I'm going to get out and I'm going to see what happens. And if I had profit, I'm going to lock in, put that profit in my account, and then I'll wait and see what happens after that. Okay, so I hope that makes sense, guys. A simple combination of using one trend line, just one trend line on the higher time frame as your long-term guidepost, but using the moving average strategies on the shorter time frames, irregardless of what the long-term trend line shows you. When price is not anywhere near that trend line, just to use that to your advantage. Okay, so I hope that makes sense, guys, and I will leave it there. I hope you have a fantastic weekend, and I will try to jump in there and maybe make another video regarding again trading on the shorter time frames with the moving averages. Okay, so really important, guys, please hit that like button. Smash the like button, helps with the YouTube algorithms. Hit that subscribe button down the lower right corner of the screen and the bell icon just below that, so you get notified when I post a new video. And if you have any comments, questions, concerns, you want me to cover anything else, just drop them in the comments below. I appreciate your watching, and I hope you have a great weekend, and we'll talk to you all soon.